Good afternoon, everyone. Welcome to Master Trader Live. Excuse me. And for those of you that join us every week, welcome back. So today's topic is mastering inverse head and shoulders patterns, yeah, which is a bottoming pattern. So bottoming patterns form in different ways. They all tend to be rounding bottoms. Not too much, you get square bottoms. Sometimes you get V bottoms. But the head and shoulders bottom is one of the most reliable. And with all of our trading or investing, our goal is consistency and to be right more than we're wrong. Right? And as far as being wrong goes, sometimes the market does certain things that patterns fail. Now, one of the things I said this morning pre-market as we reviewed the different futures contracts and markets and so on, and we viewed head and shoulders tops. So we saw head and shoulders tops on the 65-minute charts in a few of the indices. And one thing that I mentioned was that, well, the daily trends are up. So topping patterns on shorter time frames tend to be less reliable. And that's exactly what happened this morning. So the same is true as we go through these head and shoulders bottoms today, and just consider them as one of your tools, so to speak, concepts, as we're going to cover, is that I don't know how many we'll find as far as real charts, but the patterns that we cover in MT Live, depending on the market environment, sometimes you're going to find so many head and shoulders bottoms, other times V bottoms or head and shoulders tops or shakeouts and so on. So as these patterns reveal themselves to us, some of the things that we'll cover today will help you define what are the better ones from some of the not so great ones. And that is always our focus, is that we look at attributes of trends and of bottoms and tops and so on, and the different concepts that we talk about to determine the probability of one working or maybe less so. So let's get into it, Dan.
Awesome. Good afternoon. And one category, well, two that we're going to talk about today, in addition to everything Greg just said, is we're going to start with inverse head and shoulders bottoming patterns. It's one of my favorite setups. And we're also going to show you how to use them in uptrends. But thirdly, we're going to be talking about does this picture meet the definition of it? No, not really. But you'll see that it's going to be the same message. And that's what's important. So our starting point here, we're price-based traders. Today, we're focusing on the inverse head and shoulder. So they're bottoming or continuation patterns if it's an uptrend. And so what trends it in? Again, bottoming or continuation. It could be sideways or up. Multiple time frames. I'm going to show you an example of a trade that we're in right now. We entered yesterday based off multiple time frames. Is it on support or resistance? By definition, these patterns are going to be on support. And you'll see why, because of how they're set up. They're consolidating at resistance. So if they break out, you have a beautiful floor. You'll see how we use moving averages in all patterns, but particularly bottoming patterns. You'll see the 20 and 50 flattening out. And as always, what are the internals doing? And proper money management is the key. This is a slide we show all the time. It's just 9 beautiful bullish setups on any time frame, any instrument. It doesn't matter what you're trading. Candlesticks reflect the sum total of all the buy and sell orders of all market participants. And these are the pictures that we trade of the collective market participants. And I write up here, Okay, Dan, here's a buy setup, breakdown failure, W bottom, 123, 180, gap. Where's this head and shoulder? Well, it's not here. I just said these are just 9, but of course we have many more. We got sandwiches, we got measured moves, we got all kinds of things that Greg teaches in his full course. But we don't care about the name. We use names just to speed up the communications, but it's the messages from the price pattern with all those other concepts combined that is what we're trading for high probability setup. So I actually grabbed this slide from an MT Live when we talked about classical patterns. So we talked about many of them. You got triangles, pennants, head and shoulders are in there. And the reason I just wanted to talk about it, we're only talking about inverse head and shoulders today, but the concepts here are the same. We are not trading a classical pattern. We're trading how supply and demand is forming. And these pictures here, it's an inflection point. In an inverse head and shoulder, the inflection point is a breakout from this pattern that we're going to be telling you the rest of the hour.
And let's do a pop quiz to see if anyone is awake here.
I love it.
What is common to those pictures on that slide? Those 3 pictures, what's common between them?
I know they're all line charts.
Yeah, okay.
Yeah.
Consolidation, reducing volatility. There's no MAs on there. No. So what's common is what you use those words, which are correct, right? Is that there is a contraction, right, between the forces of supply and demand that are coming together. And that's a key point in that is while we're not looking at head and shoulders patterns yet, head and shoulders patterns have the same thing on the right side, whereas the left side of it starts to become more volatile, right? As it's going up and it's making higher highs and higher lows, and as it begins to expand in range, right? Coiling, right? What they're saying there in social media. I love when you guys participate, right? They're coiling, tightening ranges, and head and shoulders patterns do that too, to a lesser extent. So on the right side, things are contracting as well. So we're always looking at forces of supply and demand in different pictures. And so as we look at these different pictures, they display to us similar concepts, meaning supply, demand, contracting, expanding, and volatility that lead us to a point where when there's this coiling, right, contractions, when that happens, what that communicates to us is that prices are getting ready to make a move, because as those forces of supply and demand come together, right, they eventually reach a point somewhere like what we're dealing with the markets right now. There's so much uncertainty about the news related things where things are just in a tight range, in a relatively tight range, and they're contracting. And while I've said this previous to today, I thought they're getting ready to expand, but they haven't yet. So, right, we're getting prepared. It's going to happen pretty soon, I think. So let me share with you this link to just read a little bit about loose and tight. They're not trend lines, Robert, but what's on that slide is to communicate the contraction, what I'm referring to. You're going to say, Dan?
Thought it was off.
Yeah. Now we don't use connect dots kind of things to define support and resistance. For that, we look to the left. This is to just show you the contraction in ranges and volatility. So this mentions moving averages, but there's no moving average. Go back 1 second, Dan, because, right, so 20 MA, 50 MA coming together. This is just another way of using another tool. Right? So while we don't use trend lines connecting dots and looking at that and projecting those things into the future as support and resistance, which is totally ridiculous, we use these what we call visual aids, these moving averages. And so if the 20 and the 50 are coming together on the daily, what that communicates is that those moving averages, right, those measurements of what happened in the past are coming together in the present, and we're looking for some increase in price movement. So let's take a look at that.
So use many examples as we can, and as Greg says, it's the same but different. But here's the very simple one line. We have a momentum move down. We have what we call a left shoulder, which is consolidation. And so the shoulder's going to be different every time. And then we have a momentum move down, a rapid retracement back to resistance and consolidation. And then we're looking for the tells and when to enter the breakout of the right shoulder. And you always need a void, which was created by this prior momentum move down. See, it tried to bottom on the first shoulder and it failed. And this one just happened to bottom at this major support way the heck over here. That was your entry. So I'm saying this one is sloppy, but the same message. And so I'm purposely giving you many different flavors to show you, again, doesn't have to be perfect, but the messages are the same. So Greg, talk about this left shoulder and this right shoulder and why the messages are the same and where to enter.
Well, I'll start with all the way to the left. And the prior slide, it was a bit different, but it winds up creating the same message. It took some time to do it, but so here, look at the moving averages are close together.
Mm-hmm.
And it starts to move down. It ignites a move. Rarely does it not continue to move lower after igniting a move like that from a consolidation. So for whatever reason, right, this begins to create support. Now, the probability of this working out and moving back up is low because of what I said. It started to move down. That doesn't mean it can't do it. It just means the probability is not there to do it. And so 2020 hindsight, we have an example. Right? It doesn't work. And so I'm pointing this out in part too, because you can get trapped into these things. And you have to decide, are you going to do a counter trend trade after the move just began and the moving averages are pointing down? And while the odds are against you, sometimes they work, right? As some kind of a scalping trade. That's another conversation. Anyway, the odds are against this pattern here working out and going up a significant amount. And it went down rapidly. Now, at that point, we would assume it's going to do this, right? However that might take. It could be a red bar reversal, back down again, or go sideways and break again. So this is why we need concepts to understand retracements, meaning here's point A, here's point B, and if it's in a downtrend, it's supposed to go lower. But if it goes back to point A, and I'm not talking about Elliott waves or GANs or butterflies or squares of 9 or any of that. I'm talking about common sense. If a move started here and it's all the way back up there, it showed some kind of strength. And so that's your head, right? However it forms. And then shoulder, right, can form in a different way as well. And you look for attributes like little breakdown failures, bottoming tail bars, red bars ignored, and so on. And so at that point, you start to see, right, the transition from down to sideways to potentially turning up.
Right. So this is actually a good example where many of the retracements are rapid back to the prior high. This one didn't. Just eyeball this. This one went 70%, and then it went sideways. And then it made it to the 100. So again, we don't show you picture perfect, but the message is the same.
Yeah, it's just,
Sure.
pointing out the prior low. Sometimes patterns take time to develop.
Sure.
And, I would imagine, I don't know if this was this year, actually, no, it was 2023. So it's an old chart. But what you find is that many times, as before, depending on the market environment, you could find tons of these things. So, and it could take time for them to form, as this one did. It took a couple of months. So, and you see the moving averages coming together. So we have some pictures that we add to the picture, like the moving averages telling us that the probability is that it's getting ready to move.
And Greg, why don't you answer Robert? That's an interesting question.
What causes inverse head and shoulders more symmetrical institutions? I don't know. I mean, they form differently. They're not always symmetrical, beautifully symmetrical, like this one. And some people get into, let me count how many days are on the left shoulder and how many days are on the right shoulder, and the symmetry and all that. You're just painting yourself into a hole, because markets just don't operate that way. If you understand the concept, the general concept, and the general concept is it went sideways or formed more of a round, it went down, it went up, and it went sideways again. This is what we call a correction through time.
And we need a void, right?
So every head and shoulders bottom, every single one, is going to start from a downtrend or some kind of a down move.
Well, Greg, we're going to show them inverse head and shoulders and sideways and uptrends too, but this is the bottoming pattern picture.
Sure, but it's got to start with a downward move.
Downward movement, but not downtrend. That's all.
Yeah.
Right.
But as we look at things, right? If we find one that's in an uptrend, and you look to the left, there should be some kind of a void.
Absolutely. Right. We got pictures. Let's go. We got a lot of good stuff to show. Here's another one, bottoming pattern. I put all the bottoming patterns at first, the other ones in a couple minutes.
There's no symmetry in this one.
There is or isn't?
Not really. I mean, like this year it's kind of sloped up and it went down. Some of the things are the same. This is more flat. So I wouldn't give it the textbook of a
Oh no, Greg.
shoulder.
Greg, sorry to interrupt. Greg, no. Sorry to interrupt. That's not the pattern I'm trading. It's this one over here. Here's my left shoulder. Can you delete that stuff? Here's my left shoulder. Here's my head. Here's my neckline, and that's my anchor.
Okay. Well, all right. So sometimes we have this difference in names, comes to the same thing. But you see, I don't see this as a shoulder. This is more of what I define as a shakeout pattern, because this side is flat and this side is flat. It doesn't have shoulders or rounded like softballs or cannonballs or whatever.
Oh, yeah.
Flat. The message is the same in that, it went sideways, it broke down, and it went up again.
Tatiana, so look, this, we had Jacques, not, was that Jacques Cousteau? The Inspector Clouseau picture over there. We're looking for clues. So this was a gap negated. Didn't break out yet, but that is we call it a tell. Where this arrow is a tell. We're still entering over the high of all these bars with a stop under here. But the gap reversal increases my confidence that it wants to break out. So this is a trade we put on yesterday. We're trading the daily chart, but you remember multiple time frame alignment is one of our concepts. So the TEN had earnings yesterday, so it was on my earnings watch list. It was slopping around in the morning. So here was a gap up. I don't know what caused it. I don't care. Ugly red bar. And then it took out the high of this red bar in the afternoon. And I'm always looking at the next bigger time frame. And we were talking about the target and pattern in great length in the green room yesterday. And I'm like, look, this is an inverse head and shoulder on the weekly. So the left shoulder, you know, I could put a box around here, but the left shoulder is 1, 2, 3, 4 bars. The right shoulder is more obvious, but it's the same message. This wide range breakout was this gap breakout.
I think one way of clearing it up, Dan, is to say no matter how the shoulders form or however you want to label them, there's always got to be a head that's a new low reversal.
And some type of consolidation. So the consolidations can differ, but
right. So the shoulders, however it is, those are your consolidations.
Right.
The right one should be tighter than the left one.
That's a good distinction.
That's what moves the moving averages together. If we had them all on there, right? So they don't have to touch. The more exact you try to make it, the more you're going to become that analysis paralysis victim, right? But the right side should be tighter than the left side, and the middle should be ideally a spike down. Sometimes it could be slow, but it should ideally it comes up from the head. It comes up with some speed because speed is power. And then on the right side, it gets tight because the forces of supply and demand are right there pounding each other, right? So the memory of the prior downtrend and the spike lower, it's still new, right? The pain of that to those that were on the way down getting caught, that's still real. So when it comes up for the right side, the demand is strong enough to consume that supply. And so the sellers can't push it down much and it gets tighter. So that's an attribute to look for, right? That the right side should be tighter than the left side.
Yeah, no, I actually, candidly, Greg, I've never heard you say that, but that's an interesting observation. All right, so let's don't want to spend a lot of time on this one, but can everybody agree it's the identical message? And when Greg and I do our fast scanning on TC2000 or whatever you scan with, if you're scanning the NASDAQ 100, whatever, this picture just jumps out at me. Inverse head and shoulder bottoming pattern, and end of story. Look, I got a price for it. I got left shoulder, head, rapid move up. These 2 red bars should have gone lower, and they're not. So that's telling me it doesn't want to go any lower. I have a closing breakout. You buy over the high, stop under the prior bar's low or shoulder if you want to give it more room. You got a price for it. So Craig, so you want to tell them about your amazing course here? It's
So yeah. The course, this is a short link for it. Just put MTS 1000 on the end of mastertrader.com. Some of you may be familiar with my old company. And when I sold off all that old stuff, I said, you know what? So many people over years said, you know, this is all great, but this is confusing. You got all this stuff here, this, and that, right? Different courses and whatever. And I said, you know what? Let me just make one course for everything. And it's amazing. It came out amazing because I had all those years of teaching my old course and the other stuff that we call TPM1. Some of it really wasn't relevant anymore. Some of it was. Anyway, I created this giant course, 16 hours or so, 50 some odd modules, covering candlesticks, moving averages, market internals, intraday internals, intermarket analysis, everything and everything, gap trading, money management, keeping a trading journal, how to do it with software that's on your computer right now, psychology, everything. Maybe you were like, Greg, maybe could you break it down into a gap course or this or that? And I was like, all right, against my better judgment because of backpedaling back to the past. But anyway, this course is what we put on, not even put on special once or twice a year, I guess maybe at the most. But anyway, if you're interested in one course for everything, this is it. It's on special where I don't know if you have the code. Oh, on this page is the coupon code where you can get the course. And so the breakdown courses in of themselves cost what this is on special for now in one. In other words, the price of that course, if you were going and buying all the separate courses, it would be 3 or 4 times as much as what you'll pay for this right now. And it's amazing. And you can watch it 24/7 forever. That's the beauty part of the way we do it today versus in the past where it was on a weekend and you were just, consumed with all of this information. You can watch this day, night, afternoon, weekends, spin it back, play it again, review this particular module, and
You
so on.
can watch it on Juneteenth tomorrow.
Yep. Spend the day watching it on Juneteenth.
Same, but different.
Yeah.
Declining 20, declining 50, it's a consolidation in a downtrend, collapse. This was a nice tell. Rapid move. We call it the event. Remember it's Inspector Clouseau. Why did I start watching this? I'll tell you right here. Red bar ignored. Red bar ignored. My right shoulder.
Yeah. That flat. The squares I put there was distance between the moving averages and distance between price and the moving averages tightening up over here. You got this deep retracement and it tightens up. And so like what Dan mentioned, those bars, red bar ignored, bottoming tail bar. That's another part of the course, bar by bar analysis and how to put that together.
My computer. Correct, my computer's not working.
That isn't something new. Is Trade Station still open?
Yeah, I wonder, my mouse is not,
I see it. Mouse is moving.
I know, but it's not, the slide is not going down.
Oh,
The escape key is not working, but the mouse is working. So, do you have your, copy to open? I told you, we're gonna need this one day.
yeah. There's a way. Since you can give controls to somebody else. Let me see if I can. No options.
Yeah, my escape key is not working.
You can give control to somebody else, but I can't take control from you to operate your computer. All right. Did you hit the escape key? Maybe you lock something up?
I did already. I can't X out of it. The mouse isn't working. I can type, but the mouse isn't.
Did you try hitting the space bar or one of the arrow keys to move it?
Yeah, it didn't work.
Okay.
Let me control alt delete it. PowerPoint, exit. No, it takes too long to. Greg has a copy. I sent it to him for this reason. But
Okay. Could download it. Give me a second here.
all right, I open it up again. Let's see if it works.
No good, Dan?
Now it works. You know me. All right. All right, slide 12. Same but different. So this one, look, inverse heading shoulder. Shoulders are different, but the message is the same. Here's my left shoulder, down move, quick up move. This got my attention, breakdown failure. The next bar, range expansion, closing at the high, inside bar, price void, you're in business. You know, these are closed trades when you see all this. And we show all open and closed trades in members area. We give obviously the date, the symbol, the stock or option trade, and we give the technical setup and trade management. So this one we held for 5 days, sold in the strength. And that's what this service is, swing trading, holding things 2 to 10 days.
Who's ever, it says anonymous attendee posting questions. You can post questions right in the chat. But I saw that was open. Dan's always used TradeStation. I don't use TradeStation. This is discounted a ridiculous amount. I couldn't discount it anymore. But you can see the discount and how much it is on the page. And mastertrader.com MTS 1000.
Yeah, and this is our awesome live trading room, the green room. Start at 9 a.m. Market review, go over opens, gap trades, and it's nonstop education of our principles, but in real time, instead of in a seminar format or this format, looking over slides. And we have a good time in there. We scan, we trade together. And this one, you get 2 months for the price of one. mastertrader.com/VR2. I'm showing you this one for fun. This is actually a Bitcoin, but this was a trade we gave subscribers. So because, I mean, look, here's 2017, blasted off, breakdown failure, went up. That's not really a shoulder over here. Downside shakeout, back up. And look at this, went to 58,000. I grabbed this morning. That's at the same spot. So from this pattern, it went to 110,000. Pretty interesting, huh? Sloppier. So would I have bought this? This one is sloppier. Again, I do this on purpose. Like this one I wouldn't have bought. I mean, this is a sloppy left shoulder. This is a sloppy consolidation. So what did we do? On this closing bar, we shorted an out of the money put spread. So Greg, you know, I love doing this. On this, at the end of this day, Greg, we shorted the $33 puts, which is below this 200 MA. We shorted a put spread, take in money. If you sell 10 contracts of this, you take in $450, and all it has to do is stay above $33 and you make your money. So the options course, we have, so this is my comprehensive course that covers all strategies, selling options, which I just showed you, buying options, swing trading, core trading, day trading, zero DTEs, trading on fear. It's the awesome course that combines everything. And there's the code for that, mastertrader.com, options 1000, the same significant discount. And we have a technical based approach. So, some option traders just look at the Greeks, which, I teach that, of course, so you understand what they are. But trading off the Greeks is like flying blind. We start with a bias, and then we go to the option table to create the best strategy for that bias. All right, so next couple of charts, and then in a few minutes here, it's always we go to real charts. So Greg here, the remaining slides are going to be inverse head and shoulders, either in sideways trends or in uptrends. So this is in a powerful uptrend. Deep move down, quick move back up, left shoulder, right shoulder, bullish consolidation. We bought the high. Just swing trading. 2 to 10 days swing trading. This is an older chart, CRM. This thing blasted on earnings. So what am I supposed to do? Okay, it pulled back. You're going to have some buyers there, but that's not a quality buy setup to us because there's no support. It's far from this unfilled gap. It came down hard. So we just monitor it. Went sideways, still can't break out. Made a new low, reversal, back up, closing breakout. There we go. We're buying over the high of that green bar, target 280.
1 second, Dan, before you move on, where the go for the drawing? Oh, I forgot. All right. So head and shoulders, I'll call it a shakeout since they're flat, but it spiked down like that and it came right back up again.
Right.
So the big picture attribute that you want to take away as your starting point is the left side started down, right? It went down. And this example, as Dan mentioned, it's got this gap up. And because this came out of a consolidation, it really shouldn't come down. It should not fill the gap. Because from a consolidation, I know it's a big percentage-wise, it's a pretty big gap and so on. So over here, it could have moved higher, right? There wasn't any very compelling pattern here. But at this point, after spiking down, and again, all of these things are pictures of what traders believe, right? The psychology of the pattern. So at this point in the middle, I think we all would have thought it's going to come down and fill the gap.
All right.
It's going to go down there. And so then, all from this thinking it's coming down here, all of a sudden it has 100% retracement. So we covered loose versus tight, the head being a push down, right, making a lower low. And there has to be 100% retracement on the right side, and then it tightens up again. And so you've got this correction through time. You've got an initial correction down, price correction, time correction, should create a void up above. And at that point, you look for a pattern that says, hey, it's ready. And so for sure, with this green bar right there, that means it's ready. When that bar closes, it should keep going up.
Greg, the mouse again. What the hell?
I don't know, Dan, you have the weirdest problems. They're
Same,
unexplainable.
same problem as before. I can't escape.
Are you have an actual handheld mouse or are you using the mouse, the pad?
No, handheld wireless. I,
Mhm.
I've changed the batteries 2 months ago, and when the battery dies, I can't type or do anything. Um,
Well, the typing's your keyboard, but the mouse, I see it moving as you're moving it.
oh, but I have to move the keyboard to the thing to type, and I left click and it works, but I left click here and it doesn't work.
I have it open now. Hold on.
Yeah, go to slide 20, do 20, 21, 24, and then we're done.
Did I close it? Hold on. Yeah, I'm getting there.
Um, all right, Kim, I'll do it. That's a good that's a good suggestion. I got nothing to lose.
What did it show? I don't see the numbers. Oh, 18, 19, 20. All right, you see the screen now, my screen?
Yep.
Shit, what happened? Why did it go small? Hold on. No. Okay, there's the thing. All right, so we are on slide 21. You want us to look at 20, okay?
Yeah, 2021, just two more examples and uptrends.
Yeah, so I mean, it's the same thing,
All right.
you know, rounding shoulder, right? It's actually rounded, right? Which was the point I was trying to make before. Uh, drawing,
And then
actually rounded. There's the spike down, the 100% retracement, the tighter right side, sudden alert above what's called, right, the neckline. Sudden alert.
and look at
Wait
that
for it to
beautiful 15-minute entry, both for day trading and swing trading.
next one. Right, same thing.
Exactly.
And so this debunks the idea of symmetry.
Right.
I mean, this one is a month long or whatever, 20 plus trading sessions for this right side here. And so at this point, it looked like it was going to go up, right? Who knows why? I mean, March, I don't know, maybe just the market environment. It spikes down 100% back up again, sideways there. Notice the bottoming tail bar that breaks the lows. This is, we had a MT live on correction bars, which by the way, with MT weekly advantage, you've got a little library of past MT lives that you can view. So it's not just getting the current one. You know, you've got 7 or 8 in there to watch, 7, 8 hours of education besides the weekly trade reviews and lessons. But again, pattern there, looking for it to go higher. When you go to live trades, can you look at Roku? Sure. Yeah, we'll
And then,
take a look at that. So another example here,
yeah, I guess go
right,
to some. So,
right, down, spike, up, tight, time correction, price correction.
yeah.
So there's the advantage, mastertrader.com advantage. I think it's the best opportunity for education, ongoing education on a weekly basis with examples of actual trades and the management and all explained, MT lives, lessons, It's a great product. So check it out. All right, let's get to live charts. Okay. So we were going to look at Roku and pizza, right? Frank wanted to look at pizza if it was a head and shoulders pattern. So absolutely not a head and shoulders pattern. Okay. So this downtrend, I don't even know what to call this, because this is, a downtrend, and then it just starts marching up. But this wide range bar, Frank, was the tell, right? So that's an igniting bar that's going to start grinding up, and up to this, it just corrected for a while and it kept going. So no, that is not a head and shoulders pattern at all. I would not call that a head and shoulders either. Maybe on a weekly time frame. No, I wouldn't call it on a weekly time frame either. So when we're looking for specific price formations here, right, because they're going to be the most reliable. They don't have to be perfect, but they have to jump out at you as being, that meets one of the examples. So as this kind of just grinds up into this area, it tightens up. Read that article on tight versus loose, because as something tightens up, and it has corrected sideways in this example a couple of months, odds are it's going to try and go up. Now, I don't know why it pulled back so violently as it did. I thought maybe earnings, but no, earnings were probably back here. Oh, here's earnings. It had earnings back here in February. And there should be another one, I think. I don't see any E's. Oh, here we go. Here was the next earnings here in May. And then it gapped down that day and it's come back up again. So what is this? Roku. So it's got a big bottom. And now that it's gapped up as it has, you'd want to see this not fill this gap. Meaning if today was to turn into a green bar, okay, and you'd get what we, in that beginning slide of patterns, it became a bullish 180, we would mark this as a long above the high. Is eBay a good example? Maybe on a weekly time frame, because I see the spike. It's really not a textbook. I wouldn't pick it to show somebody as a head and shoulders bottom.
No way.
But what's the but mean? What the but means is, it went down and it came back up again, 100% retracement, which is going to be positive. And maybe even on a monthly time frame, it might look like something that we recognize. No, we don't. It's just a giant bottoming tail bar. So that's retracement concepts. That's all covered in the course as well. That's retracements. All right. MGM, if you see something, no, no. And part of the reason we're not going to find many, we can start looking through stuff, is because how the market started correcting at the beginning of this year, and then there was the Liberation Day catastrophe, and then the backpedaling of Liberation Day, and that spike and that giant spike up on April 9th, I think it was. And then a lot of things just started advancing. So other things that are, consolidating now have underperformed. But I mean, it's a whole nother conversation of understanding price patterns. While I wouldn't call this any kind of a head and shoulders, this coming back up in this wide range bar and the consolidation at the top of the wide range bar, which is in the area of this high in the 200, I just set an alert up above, just above the 200, and see if it triggers.
But
Uh,
Don, yeah, April, bottom of April was the head, so I see what you're looking at.
on this,
Yeah, I mean, it's a sloppy one, but yeah. Bottom of April is the head, left shoulder, right shoulder.
I guess if you mean this is the right
Yes,
shoulder,
correct. Yeah,
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 but it's pretty sloppy. I mean, it with
it is
this kind of a bar,
correct.
it's not the greatest because of the increase in volatility,
Without a doubt.
you know.
Sloppy.
And look, that E means that that's when it reported its earnings. KKR he mentioned. This is similar to what we were looking at before. And this was the right, April 9th, the backpedal of Liberation Day, which was right here, right? Announced it on the 2nd, and then it markets gapped lower the next day. Let me just flip through some of these here, these active stocks, and see if anything pops up. Nope, no, I don't think we're gonna find any. D-Dog, right?
Or
That was today.
it's a
That's not a
breakout.
head and shoulders.
Right, right. We bought it today as a breakout. Right. Same with JP Morgan and Echo Alpha. We're in.
So think about it like this from this point of view, in that you could look at this and say, you know, look at this down and up and so on. It's like this is encompassing like months and months. What we're looking for is something within a pattern on a daily time frame that would encompass maybe a month or two, you know, where it would have happened in here. It's
Mhm.
tight enough in here, right, to support something happening. This is just so far away, you know. However, to get head and shoulders patterns, that's why we do empty lives on candlesticks and retracements and moving averages and volume and correction bars and all this stuff, right? Because one idea, while is really helpful and powerful, right, it doesn't meet the definition of what you might see, right, every single day. But this went down. It had a deep retracement up, and it took out these pivot highs. That's positive. And here you could say, what about that? That little section there, could that meet a little head and shoulders kind of a pattern? I would say, yeah.
An uptrend, yes.
This part right here,
Right.
I could call it a shakeout. I could call it a head and shoulders. Call it what you want. It spiked down and it came back up again in this little micro part of this bigger picture that I'm explaining. But the key here is sideways, which was positive. For whatever reason, it poked down. It came right back up again, 100% retracement. And now this bottoming tail bar communicates to us unequivocally that there are buyers on a dip. So to buy it above here just makes sense. To believe it'll go higher. And that's how we put together, a bigger picture analysis and these, that initial slide that it's like, here's these MTS concepts, and it lists candlesticks and trends and support and resistance and moving averages. Those are actually the names of the modules in the full course, right? What I call thought building lessons. And as you put that all together and assimilate that, it's like, okay, well, this part here doesn't meet the head and shoulders pattern, but when I think about retracements and how this moved, and now this part of it, and it's got room to come up here, that provides me with enough information to believe something. And that is where we're actually going with each MT Live and a course, is that how do I create a belief that I believe this stock is going to go up, and I believe another stock would go down, and I believe this stock is just going to chop back and forth. Stops are head or the shoulder. Stops should be the shoulder. Okay. So remember, to make a head and shoulders confirmation, it's got to violate the neckline. So it's got to break out. So if we said this is the head and shoulders pattern, and now it's broken, you've got a confirmed breakout on a closing basis, and we're looking at this wide range bar here. And so your question, as you start to again assimilate what we're talking about, I'm not demeaning you in any way, but it does come down to common sense in that if I have a wide range bar breaking out of this head and shoulders kind of a pattern, if it violates the bottom of that wide range bar where it travels from here down to here, I would bet almost like with a 99% probability of being correct that it's going to violate the head and break below it, because that's a shock. Right? So shock patterns is another conversation. Okay, let's look at one or two more. And I'll just flip through some of these. The D-Dog we looked at, some of these making moves. I don't think, here, Meta, that little spike down that happened on that day, it must have been market related in some way.
Yeah.
And where it spiked down and came back up, and there's the bottoming tail bar. Right, so there's your little head and shoulders kind of a bottom there. This is not that. Go back here for a second. I don't know why this failed. Maybe earnings.
It was earnings. That's my call spread watch I posted. Yeah.
Yeah, yeah. I don't know why it doesn't have here. Here's an E. It had to be one in May. I guess
Yeah,
maybe it happened here.
it was earnings for sure.
Yeah, yeah. So here was this kind of a downside spike, and then the earnings come out and knocks it back down. But yeah, well, not a head and shoulders, but okay, and enough of not really a great one. Amazon, anyway. So there you have it, folks. All right. I hope you got some great information out of this that I find really helpful. Consider the courses. If you have questions, email Dan and I. Right? Real easy. Dan and Greg at Master Trader. And yeah, happy day off tomorrow. Enjoy the day off. Relax, and we'll be back on Friday. All the best. Bye-bye. I love those little hearts that pop up. It's pretty cool. Good night, everybody. Good afternoon.